A very good morning to all our viewers. You have tuned in to Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts, so do get ready for that. But before coming to that, let's have a look at what the markets are up to. So Cheryl, on the back of weak global cues, the Indian market seems to drift lower, but nevertheless, we are seeing a good amount of recovery from the day's lowest point.
Absolutely. A very good morning to you, Srishti. But we have to also remember that today is the expiry as well, or rather the weekly, I think Nifty Bank expiry as well. So you need to watch out for that. But I beg your pardon, tomorrow is the expiry. I think I'm running a day in advance, hoping that the weekend comes sooner. But yes, tomorrow is the expiry. But today, if we look at the markets, we're trading flat with a negative bias. And like you mentioned as well, that we have recovered quite well from the day's lowest point, but we're trading flat with a negative bias. Nifty Bank is trading lower by about 0.2% as we speak. It is underperforming the benchmark indices, but advance decline ratio is still kind of tilted towards the favor of advances. So let's see how the day progresses going ahead. Talking about the list of gainers in trade, then you have Ayush Motors, you have Power Grid, as well as Apollo Hospitals and Adani Enterprises among the top gainers. Add to that list, even L&T is gaining, with seeing gains of about 0.8%. But the losing side, it is the metal sector that is under pressure. So you have Hindalco and JSW Steel that are the top losers on the Nifty, followed by Adani Ports, Kotak Mahindra Bank, as well as Bajaj Finserv that's under pressure in today's trading session. Remember that today we will be having 4 Nifty companies that will be reporting their earnings, so all eyes on those candidates. Talking about the sectoral indices, then Realty Index is the one that is gaining. It's 0.7% after coming in for Realty Index, followed by IT Index as well, seeing gains of about 0.4%. But on the losing end, we have Nifty Metal Index, that's the top loser on the sectoral front, followed by PSU Bank Index, that's down about 0.3% as we speak. So that's the way how the markets are shaping up today, Srishti. But yes, no doubt we have to watch out for the companies who already come out with their earnings, and that is Tata Consumer, AU Small Finance Bank, as well as IndusInd.
Yes, absolutely, Sharon. And a lot of stocks on the in action on the back of the results. And on ET Now, we spoke with all the top brass, like you mentioned, from Tata Consumer Products, AU Small Finance Bank, as well as IndusInd Bank. Let's listen into a slice of our conversation with them.
I do think this year will be a relatively easier year. Now, again, I'm keeping my fingers crossed there. And international, more importantly, we've taken aggressive pricing and structural costs. So macro environment can't predict. I do think it will be less eventful than last year. But internally, we are very, very strongly focused on execution. Just to give you a perspective, right now we're in the top quartile of innovation. We will climb still higher. We said 4 million outlets. We'll be at 4 million. But more importantly, now that we've got a big portfolio, we're going to split our routes for food and beverages in all 10 lakh plus towns. So that will provide extra focus. We've got strong internal numbers. We will continue to deliver double-digit growth and flow that down to the bottom line. And more importantly, we are looking at market share gains as well this year. I expect that tea costs will trend marginally lower if there are no unforeseen climatic things like droughts and floods, etc. That should aid margins. Ishko, which is our ready-to-drink business, is now 600 crores plus. Just to put it in perspective, when we bought out PepsiCo's stake in end of FY20, it was 180 crores. So from 180, we've now reached 600, and we're still not where we should be. We're still expanding aggressively.
Credit card should become profitable next year, right? And, we will start monetizing our QR code business, and, we'll start building more a digital franchise than a brick and mortar. So I think overall, I'm very optimistic around our whole future, and, and the way we handle ourselves in 6 years, that gives us more hope. That the first foremost focus area for me is to build deposit, right? And that we are growing, very fairly well. Last year also we grown by 32%, right? So I think this year also, in spite of the higher rate cycle and, the lot more challenge there, but I hope that, we can grow around the range of 28-30% in deposits. The commercial banking space, which we started as a small finance bank, which is just coming up, right? That may grow in the range of 30-35%. So I think we have a well-diversified book. 92% book is secured. We deal at around 14-15% IRR. Historically, our asset quality has not deteriorated at all, even in the bad of the times. So I think if you ask me, the overall asset is there where we get most of our comfort. My challenge is not asset and asset quality, to be very honest. My challenge is to really build a brand where people trust us more and more. We get a low cost deposit. If we get a low cost deposit, there will be an automatic sustainability of this platform.
The system credit growth may slow down, but you have to look at each organization in a very different way. If you look at us, we have domains. Our domains are coming from cyclical lows. So for example, the CV cycle or the microfinance cycle or the diamond, they've all contact businesses and were affected during COVID to a large extent. What we've seen in the last 12 months on the CV cycle, or we are not seeing, look at last 8 quarters, our margins have been very steady between 4.15 to 4.25, and that's been a guidance and we've been able to maintain. The book is such that our mix of the book gives us the margin. We have a very well balanced book between fixed and floating. So 51% of our book is fixed, 49. What happens is you see stability of margins, and that is what you're seeing in this bank, a very stable margin scenario between 4.15 to 4.25 towards consumer. That's why the margin expansion will happen.
That's the voices coming in from top management right here on ET Now, Tata Consumer Products, as well as AU Small Finance Bank and IndusInd Bank, sharing their outlook for the year ahead for their companies. But let's move on and let's bring on board our guests for today. We have Kunal Bothra as well as Mr. A.K. Prabhakar joining us on the show. Very good morning to you, Kunal, as well as Mr. Prabhakar. Thank you so much for joining us on ET Now. Mr. Prabhakar, let me put you in the spot by asking you that what should retail investors do to make sure their wealth is protected 4 months down, almost 4 months down in the year 2023?
Good morning. Thanks for having me here. There is a news that Gujarat government companies, state PSU companies, there is a new rule applicable. They are talking about 30% of your profit after tax has to be paid by dividend, and even bonus has to be given if they have a huge reserve. So I was checking about 6 companies, and no company has paid more than 10 or 12% of their profit after tax as the dividend. So there, I think huge upside is possible. The companies like GSPL, Gujarat Alkali Chemical, GNFC, GSPL, GMDC, and Gujarat Industrial Power. None of the companies has paid more than 12% of their profit after tax as dividend. That and most of the stock is trading below 7 times their trailing 12 months P ratio. So that means there is a huge potential for these companies to get re-rated, and there is at least 20% to 25% upside in the next 12 months. So every time there is a special opportunity which comes our way, we need to grab it with both our hands. So, and there were results also which were fantastic. Mahindra Holiday came with a fantastic result yesterday. So I think another the company which can give very good upside, and as our income is growing, I think Mahindra Holiday customer acquisition will be even better. And we have Mahindra CIE which came with the result. They're also a wonderful result. So somebody who wants to invest for 1-2 years, there is a huge potential there also. So there are opportunities which are emerging. So we need to grab it so that we make good returns over a period of time.
All right, so that's the take coming in from Mr. Prabhakar. But on that note, viewers, we will slip into a break on this edition of Buy Now, Sell Now, so that when we come back, we can start taking all of your stock-related queries. So don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, your one-stop destination to get all your stock-related queries answered by our experts. So on the expert panel today, we have Kunal Bothra as well as Mr. A.K. Prabhakar. Remember, viewers, that like I mentioned, this is a show where we can get you answers for all of your stock-related queries. We are live on Twitter as well as Facebook. And you can write to us on the WhatsApp number that's flashing on the top of your screen. You know the drill. So let me get going with all the queries then. The first one that I have is coming in from Shankar. He's writing to us from Tuticorin. And he's holding Sun TV at a price of around 521 rupees per share. He now holds, he's seeing loss of about 11% on this particular holding. So he wants to know, Kunal, should he buy some more Sun TV or to average it out, or should he just exit from here?
I think you should exit. The stock has been an underperformer. In fact, Sun TV, Z Entertainment, most of the media stocks have actually underperformed in, I think, the last so many years, whether you look at it from the last 1 year of correction or the last 3 years of rally from the post-COVID, bottoms for the indices as well as for most of the stocks. So I think in that time frame, the stocks have underperformed. It doesn't make sense to average out the stock at current levels. I would suggest an exit and switch to maybe, something from the formidable large cap banking names, maybe an ICICI Bank or an SBI, HDFC Bank. These could actually be much better bets.
Okay, moving on, and Mr. Prabhakar, coming to you for the next one. The question is from Delhi, and he wants a fundamental view on VRL Logistics as well as VIP Industries. He didn't share whether he has invested in this counter, but how do you look at the fundamentals and the outlook of these companies?
See, VIP Industries, we have a coverage, and we are very positive on luggage space. As people have started to travel, I think Safari and VIP will do very good. So, yesterday the notification has come in the exchanges that there is a malicious ad for which VIP Industry has given a clarification. I think, any correction would be an opportunity to buy in VIP Industries. We are a logistic, we are very positive. Now, we need to understand when it comes to trucks, they have one of the highest fleet and they are replacing trucks with very efficient trucks in the next 1 year. So, I think that will boost their margins also. So yeah, we are positive, but you need to have a long-term view. Our roads are getting better, railways are getting better. So long-term view is positive.
Another query coming your way, Mr. Prabhakar. This one is coming in from Shravan. He's writing to us from Ahmedabad. Apologies, Shravan. We've not been able to take your queries earlier. But he wants an opinion on Biocon. He's holding about 100 shares at a price of around 250 rupees per share. He's saying he's suffering a loss on his holding in Biocon right now. So he wants to know whether he should continue to hold on to Biocon or look to book losses. And also he wants to know your top picks in the healthcare and the pharma space for a period of 3 to 4 years, which Shravan can go ahead and bet on. What's your take on Biocon? Firstly, Mr. Prabhakar, and the other one, what are your favorite picks in the pharma and healthcare space?
See, Biocon has been going through a rough period for a very long time. So they are trying to sell some stake in Biocon Biologistic. We have been yesterday, 2 days back also, there was some deal which has happened. So I don't think, immediate recovery will be there, but long-term prospect can be good. But, we don't track pharma as very, very closely. But in that, if you think, we need to buy something, Dr. Reddy's lab, Gland Pharma are attractive at current level. But, Dr. Lalpath lab also can be looked in hospitals. Apollo Hospital is something we like, and KIMS are few places where you can invest. But pharma will take time to recover. There are a lot of headwinds there. But if the US business starts to improve, then I think Land and Dr. Reddy, even Sun Pharma for that matter, are few stocks to look out.
Okay, moving on to the next query. Kunal, coming to you for the next one. The question is from Purnima, and she says that you have been bullish on Poorawala FinCorp. So are you still holding your stance on this one? And she's rather looking to shift to Voltas or she's looking for a shift from Voltas to KRBL. Will that be a good move? So 2 questions for you.
Poorawala FinCorp, yes, I'm bullish on the stock. I think it's moved up quite well from in my recent levels. I think around 293, 296 is where I'd recommended. Stock is almost at 314 to 16 odd mark. So would still hold the bullish stance. I think if I'm not wrong, today or tomorrow is where the results would be announced for the stock price. So I'm not sure that post results whether the stock would move up higher or lower. But then broadly the trend for the stock is extremely bullish. So I would suggest to hold on to the stock if you are a medium-term investor. On the second query which you have, shifting from Voltas to KRBL, I don't believe that that may actually be a good bet, because my sense is Voltas is just coming out of a big corrective phase. Voltas, Havells and most of the other stocks in the similar space, they've started to show signs of recovery. I would suggest to stay invested. If possible, few other names which I can suggest even at current levels, look out for IDFC Limited, IDFC First Bank, from current levels, and if possible, start accumulating few of the PSU banking names, especially the mid cap end to small cap end of the banking names. I believe that there could be a possible strong rally in that phase of the market as well.
All right, this one is coming in from Venkatesan from Coimbatore, and he is holding Century Ply for a period of more than 2 years. Now he wants to know whether he should hold on to this particular counter for some more time or look to exit this counter altogether. What's your take on this, Kunal?
So Century Ply is interesting because that stock went into a strong rally phase somewhere in 2020. I think the stock recovered from, if I'm not wrong, 120 rupees to almost 720. And from 720, it's now corrected back towards 500 levels. Now, the recent correction, in the last 1 or 2 years has been very sharp for Century Ply. But I believe that this could probably be a phase where, because the stock moved up by 5x, 6x in a span of 1 year, it's going through a time-wise as well as a price-wise correction. So if you are in from a medium to long-term play, then I think only it makes sense to buy the stock at current levels. And in case if it dips back towards the 450 mark, which was the previous major swing low for Century Ply.
Okay, Mr. Prabhakar, coming to you for the next one. The question is from Balan, and he is holding 2 counters. Firstly is KPR Mills from a price of 605, so at a loss in this particular investment. And TD Power invested at a price of 145 at a mild profits in this one. Is it advisable to hold for next 1 year, or rather shift to names like SBI or KPIT Tech?
KPR Mills, I think it is a very good stock, but textile globally had some headwinds, so the stock is corrected. But for long-term investor, I don't see any problem there. TD Power, we don't track it, so I won't be able to comment on TD Power.
On the charts for TD Power?
Yeah, attractive chart, trading at a multi-month, I think if I'm not wrong, already at a multi-year high for itself at 169 plus mark. So looks attractive. The trends have been quite strong for TD Power. You can continue to hold on or look to buy at current levels. The stop loss from a short-term play, which I would suggest, would be closer to 155 for the stock.
All right, this one is coming from Sudha, and Sudha wants to know, Kunal, or rather I'll take this one to you, Mr. Prabhakar. Tata Chemicals, Orient Electric, Schaeffler and Kajaria. These are her holdings, and she's making actually almost nil returns on all of these holdings. I'm unsure. Okay, she's holding for the last 1 year. What should she do? Stay put with all of these holdings, or which one she should look to exit? Tata Chemicals, Orient Electric, Schaeffler as well as Kajaria Ceramics.
Electric is something we don't track, but other 3 companies are blue chips, so I don't think you need to worry. Tata Chemical is in a business where it is more of a commodity, so it will take its own time for a recovery. The stock has almost more than doubled in the last few years, and that is why it is taking a pause, and the prices are also not conducive globally. So that is something. Schaeffler, it is a MNC company. So once the auto space starts to recover, that also will do good. So I don't think there is a problem in all the 3 stocks which you are holding, but Orient Electric we don't track, so I won't be able to comment.
Okay, moving on to the next query then. Kunal, coming to you. The question is from Ramesh, and he wants to know, is it worth buying ITD Cementation as well as Gujarat Fluoro at current levels? What will be your recommendation?
Yeah, I think ITD Cementation could be a good bet. The stock has just recently come out of a multi-month swing high, trading at 119 odd mark. The next level of targets on the upside for ITD Cementation could be at 140 plus mark. So I would believe that that could be an interesting bet. I would suggest a buy on ITD Cementation.
All right, that's the take coming in on ITD Cementation. But on that note, we'll slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking all of the stock-related queries, so don't go anywhere.
Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you all your stock-related queries answered by the experts. Continuing with the same, and the next question that I have, is coming for you, Kunal. The question is from Usha from Bangalore, and she's holding 200 shares of AU Small Finance Bank from a price of 580 rupees. A result candidate, we were also joined by the management as well, and she's mentioning that today morning you mentioned that the chart looks interesting. So what's your take on AU Small Finance Bank?
Yeah, the chart looks interesting. The way the stock has gapped up. I think last week post results from 580 levels to almost 625, 630. A major gap has been created, and the stock moved on to I think touching levels of 680 plus as well in this phase of the rally, which means that this 580 to 620 mark would actually be a huge support for AU Small Finance Bank. So any retracements closer to that level should be ideally taken as a good buying opportunity, would have a bullish stance on the stock price, and I think dips like what you're seeing today could be considered as ideal opportunities to start investing, provided you are a medium to long term investor.
All right, this one is coming in from Chandrasekharan, writing to us from Chennai, and he's holding L&T Tech, 15 shares at an average price of 4,450 rupees per share for the last 1 year. He wants to know whether he should look to average it out at current levels or instead exit and buy KPIT Tech altogether. Do you think that this sort of a strategy makes sense, Mr. Prabhakar, moving out from L&T Tech and then going ahead and investing the money in KPIT Tech, because he's definitely losing money in L&T Tech?
No, I don't think so. No, KPIT Tech is very expensive stock at this point of time to ship. I think L&T Tech is a safer bet. Now they are the IT as a whole is in a bad time, so it is better to get invested. And when good times are there, you will make money. So patience is the game here.
Okay. Kunal, coming to you for the next one. The question is from Ramachandran, and he's holding 60,000 shares of Yes Bank from a price of 16 rupees a piece. Whether to hold, average or sell, because I've been seeing for the past so many months, the stock is trading in quite a range for now. So is this consolidation expected to get over soon?
Well, I don't see any major up move, frankly, for Yes Bank. I think the best for the stock, at least over the last so many years, is behind us, at least comparatively with respect to many of the other private sector banks, which are actually looking very attractive. My sense is that Yes Bank, even the recent charts, for example, the stock made a high which was around 22, 24 levels in fag of 2022, and then from there the stock has corrected very sharply. So I would sense that this stock would probably remain into more of a range bound. I'm not sure what's the rationale of you buying such a huge quantity of Yes Bank as compared to a possible investment in some other mid cap or large cap formidable banking names. I would believe that you should shift your strategy from being invested over here to looking out for more mid cap as well as large cap names. There are plethora of banking names which are actually looking far more attractive and with a strong possibility of a good return from a medium to long term play. So I think it makes sense to shift from Yes Bank to those kind of names.
All right, let me take this query coming in from Hemant, and Hemant's query is on LTI Mindtree. He's actually purchased it at 4,500 rupees per share. He's saying he's making losses. Should he look to shift to some other IT stock altogether right now? Kunal, what's your take on this one? His time horizon is 1 year. And this one is from Vivek, sorry.
So, possibly in the next couple of months, you may see some bit of more correction for LTI Mindtree, because the last, or rather this month of chart has been a bit, of a downward pressure for LTI Mindtree, and it's forming some sort of a negative pattern. Now, you may have those periodic bounces or minor rallies in between. So, I'm expecting, say, for example, the stock to come back towards 4,300 before it gets into a bit of a corrective phase. So, ideally, the strategy over here is that the closer the stock comes to your cost price, is where you should start paring out your losses and reducing your your quantity of investments over here, and then look to buy back the stock possibly in the next couple of months if it corrects sharply, say by another 10% to 15% from current levels. So I would suggest to exit on rallies as well as then buy on dips, assuming if the stock gets into a correction later.
Okay, moving on, and Mr. Prabhakar, coming to you, the question is from Rajesh Maheshwari, and he's holding 150 shares of GNFC from a price of 577 rupees a piece. All these Gujarat-based companies are in focus, and this particular stock is also up by 7.5%. What to do next, and will that make sense to exit at this point in time, or he should continue to stay invested?
I think there is a big opportunity here. At least 25 to 30% upside I see in the next 12 months. Because if the dividend yield has increased itself, that is going to be great. No, none of the Gujarat government PSUs, the dividend yield is more than 2%. Whereas you take central PSUs, they pay very good dividend, and every company, whatever I've checked, which is high dividend paying in central PSUs, they are above 30%. There are companies which pay almost 70% of their profit after tax. Here you have companies which are paying average 12% or less. And the kind of reserves they have, the bonus will come. I'm not a fan of bonus, but bonus also might come. So there are multiple events which will play out. I will hold on, see what is going to happen in the next 12 months.
All right, this one is coming in from Mr. Vishwanathan Nair. He's writing to us from Kochi. And Kunal, this one is for you. CG Consumer, do you think it makes sense to buy right now at current market price? His time horizon is the next medium to long term. Actually, I will take this to Mr. Prabhakar. Given the fact that it's medium to long term, given the fact that you have a lot of activity taking place in this particular counter, management change, analysts don't seem too gung-ho about it. You saw the stock getting hammered out of shape yesterday's trading session. Today as well, the stock is under pressure. What's your take? Do you think now is the right time to look to park your money in CG Consumer?
It is not a stock which we track closely, but the kind of run up it has seen, I would wait out and watch out for 1 or 2 quarters before I can enter.
He's corrected me. He's saying not CG Consumer, but then if not CG Consumer, then it's CG Power. Do you think that one also is a good bet then?
Track. No.
Okay.
Crompton Group, we don't track.
On the charts, either one of them?
Yeah, CG Power has done exceptionally well. I think from 2020 lows when the stock was almost, I think, at 5 rupees or 6 rupees, it's now at 300 rupees. So it's done phenomenally well. I'm not sure what is the kind of expectation you have in terms of returns going forward for the stock after such a steep rally. So the risk reward generally gets skewed for such kind of names. Ideally, I would suggest an avoid unless you have a target range or a time frame which exceeds more than 5 years plus for the stock price. If it's anything related to medium to short term, I would suggest an avoid.
Okay, Kunal, one more query coming your way. This query is from Karthik, and he's holding 3 futures. And first one is Sun Pharma, holding 2 lots from a price of 988 rupees. And he's sitting at a loss of almost 20,000 rupees on Sun Pharma purchase. And on the contrary, he has tried to hedge that one with buying futures of SBI as well as HDFC Bank futures. And all in all, he's at a total loss of 10,000 rupees. So what should be the strategy right now? Because he is not willing to book loss in Sun Pharma. So what will be your advice?
So I think first of all, I mean, buying Sun Pharma and as a hedge, having it with SBI and HDFC Bank are 2 different rationales. I mean, these are not the rationales which you should be looking out for when you are looking to trade in futures side specifically. There has to be individualistic or at best sector-based calls which you have to take. So pharma and banks of course are 2 different streams as well as 2 different sector movements which happens devoid of how the markets move. Now individually on those 3 names, SBI is something which I think I've been flagging off for the last couple of days for a target of 580 approximately. So I would be bullish on the stock till the 580 mark. Hopefully we can expect this level for SBI say in the next 1 week or so. HDFC Bank, I think the stock is going through a time-wise correction post results. So it may take at least another couple of weeks or by the end of start of the May expiry is where I believe the stock would gradually start to show signs of uptrend. So you may have to wait out for that. Sun Pharma, I would believe has lost its mojo back. I think there's been a lot of negative news flow for the stock price. So you can continue to hold on as of now, but then I think 955 could be a stop loss which you can keep for Sun Pharma looking at the spot levels.
All right, this one is coming from Venkatesh. He's writing to us from Indonesia. He has Alkyl Amines, 25 shares at a price of 2,700 rupees per share. He's asking whether he can average it for a long-term holding. Mr. Prabhakar, what's your take on this particular counter?
I think he can average and hold on to the stock.
Okay, Kunal, coming to you, the question is from Deepak and he's holding ITC from a price of 378 rupees. Wants to know, should he exit at current levels and rather look to buy at lower levels given the recent run-up in the stock?
Well, I would not suggest an exit as such, but yeah, you can look to book out profits and then look to trade. But I'm not sure whether the stock would actually go into any kind of a major correction. The last, I think, 15 or 20 trading sessions, the stock has seen a correction of just 1% or 2% at best. Now, I don't know whether that's the kind of a correction which you're looking out for. And if that's the kind of a correction, then I think it doesn't make sense because you've already bought at lower levels of 370. I think you should stay put idly over here. Yes, the stock may enter into a phase of consolidation at the 414, 416 mark, which has been my potential target range for ITC. But then since you bought at lower levels, I would ideally suggest to hold on to the stock.
All right, this one is coming in from Lakshmi. Kunal, this one is for you. 800 shares of Motherson Sumi at a price of 230 rupees per share. Already at a loss of approximately 30%. Should Lakshmi go ahead and hold on to this counter? Samvardhana Motherson is what I'm talking about.
Well, I would suggest to hold on. If possible, then I think closer to 68 or 69. If in case the stock happens to come back to that level, it's a good zone where you may look to start averaging out and try to reduce your cost price. Because my belief is that the last 1 month of price patterns indicate that there could be a change of trend for Samvardhana Motherson. My short-term targets which I had highlighted for the stock have been in the range of 76 to 78. So if possible, say closer to 68, 69 is a good level where you can look to average.
Okay, Mr. Prabhakar, Krish is holding 35 shares of Tube Investments from a price of 2,628 rupees. What's your outlook? Is that a hold or exit? And can he also average at this point in time?
So this is a Chennai-based Murugappa Group company. So they have lot of businesses and few businesses they have gone unrelated. So no, that is why the stock has corrected. But taking the management pedigree, I think you can be invested. But averaging is something I don't like. You are in a good quality stocks, just hold on to it.
All right, then on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. We will be back taking your queries, but we now step into the thrilling world of Hindi cinema and the 68th Hyundai film. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of your stock-related queries. Then this one is from Anjali. Wants to know if Cipla and Sun Pharma are a good buy at current price. Kunal, what's your take?
Not sure on Sun Pharma. As I said earlier, maybe you can have a risk-reward play over here for Sun Pharma. You can keep 955 as a stop loss and look to buy the stock. But again, because the sluggish chart patterns, I would not be too much enthused on the stock. But then I think for Cipla, the chart patterns could be a bit attractive. The risk reward has been very attractive. I have been earlier flagging off bullish calls in the stock over the near term, so would maintain that stance on Cipla. You can also look at DV Slab if you are in from a medium term play, not on the F&O side, but then I think from the medium term play, I think DV Slab also seems to have formed a major bottom for itself, at least on the recent charts. So that's another stock which you can look out for from the Pharma pack.
Okay, Kunal, one more question for you. Arvind Reddy bought Anant Raj from a price of 105. It has already hit your target. What's your recommendation? Continue to hold on or book profits?
So yeah, I think 140 was the recent targets which I flagged off for Anant Raj. I would be bullish on the stock even going forward. My sense is now that the stock is entering into another leg of a breakout. More importantly, the entire real estate pack looks extremely attractive from current levels. So if the market also tends to perform, say, going forward, then I believe stocks like Anant Raj and maybe possibly DLF, these stocks can scale up at least another 15 to 20% higher from current levels. So if you have a tendency to hold on to, say, for the next 6 months to 12 months, I believe potentially another 15 to 20% upside is what you can expect on the stock.
All right, and with that, let's kickstart with the rapid fire then. The first one coming your way, Kunal, L&T Tech. We did speak on the fundamentals. Well, Rao from Baroda wants to know what should he do. He has 60 shares at a price of 3,600 rupees per share. Should he add some more?
So yeah, you can look to add some more at current levels and possibly look out for targets of 3750 for L&T Tech.
Okay, Kunal, this question is for you from Imtiaz. Between MCX, CG Consumers as well as Ipca Labs, which one is a buy at current levels?
MCX could be a better bet.
Okay, Krishna Kumar wants to know about Pfizer, 350 shares at a price of 4,395 rupees per share. Mr. Prabhakar, what should he do?
Exit.
Okay, Kunal, Phillips from Kolkata holding shares of Moripin Labs at a price of 20 rupees. Can he hold for the next 2 years?
well, yes, I would suggest a hold.
Okay, this one is coming in from our viewer. That's Mr. Ahuja wants to know about Adani Enterprises, whether he should go ahead and buy this one for a period of 2 years or look 50-50 investment in Adani or Nestle. Kunal?
Well, yeah, I think Nestle could be a better bet.
Mr. Prabhakar, Sandeep is holding shares of India Mart from a price of 3,800 rupees. How is this stock looking like for long-term investment?
I will avoid this stock.
Okay, this one is coming in from Suman from Bilaspur on Paras Defense, 50 shares at an average price of 590 rupees per share. Should he continue to hold or exit, Kunal?
I think you should continue to hold on.
Okay, Mr. Prabhakar, the viewer didn't share his name, but he's looking for your most preferred bet amongst the infra space.
HG Infra.
Okay, Kunal, Indian Hotels, Manjushri from Bangalore wants to know, should she look to invest in this one right now or should wait for some more correction to come in this counter? Next 6 months is the time horizon.
Buy and dips is a better strategy, but in case if the dips doesn't happen, then I think it makes sense to buy the stock at current levels, but keep your position sizing a lot more less at current zone.
Okay, Mr. Prabhakar, Anand is holding 50 shares of Dish TV from a price of 80 rupees. What to do next in this one?
The television space has not done very good, so I would avoid.
Okay, let me squeeze in this one because I promised the viewer. Ravi Tega from Hyderabad. Kunal, data patterns, 50 shares, 1,660 rupees per share. Short-term target, he's looking for a swing trade.
The recent targets for the recent breakout for the stock would probably give a target of at least 1850 to 1800 from current levels.
Okay, but with this, it's time's up on the rapid fire session as well as buy now, sell now. Thank you so much, Kunal, as well as Mr. Prabhakar for joining us today on ET Now and helping all our viewers with their stock-related queries. But as we go, the markets have recovered fully from their day's lowest point, and even Bank Nifty is trying to get back into the green space. But with this, it's time to wrap this edition. It's a goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching.